Hi traders, Luke Suddards here, global macro strategist at Pepperstone. We've got another episode of Technical Tuesdays. Again, I'll be live and trading view any questions you have. Let's kick things off. The US dollar index. We can see it's been a quiet day today, not much movement. It's still early in the session though, so as we open properly into the European session, we might get some more movement. But this is not a great candle for the bulls. We can see the RSI2 is much lower than the previous peak there, so a bit of negative divergence. I'd say 101 would be the target for the bulls to reach. Going back to the spike in COVID, that was a level where there was some resistance in price. On the downside, I think 100 now will be the new psychological level to watch for any pullbacks, and if support holds there. We've got the 21-day exponential moving average not far away, but yeah, not a big fan of that negative divergence there and the shape of this candle, but it is still early in the session, as I say, so that's one to watch. Let's move on to Euro US dollar. Let's put onto the cursor. We can see here that it broke down below that previous low at around 108. And now we're trying to see a bit of a bounce from just below there at 107.854. Again, some negative divergence here. It made a lower low, but the RSI is not confirming that. So selling momentum's kind of waning a bit there. On the upside, the target would likely be 108 to clear first, and then we could see some stickiness here against this lower trend line of the descending channel. And above there, we've got the 21-day exponential moving average at around 109, just above 109. And the 50-day simple moving average slightly higher above there. But we need to get back into that descending channel if the bulls are to have any hopes here. Then on GBP US dollar cable, we can see, there's a lot of stickiness around this key psychological 130 level. It's kind of a doji candle at the moment. Again, some negative divergence. And we've got those RSI points drawn in to show us sort of some of the key levels of resistance. For the bulls, I'd say 131 would be a key level there, around about that 21-day exponential moving average. If we break 130, then 129.5 and 129 would be levels for the bears to watch. Let's move on to Euro GBP. So Euro GBP got right down towards this 0.825 area again. It's having a slight rally now back into that 0.83 former support, which could act now as resistance. Again, a tiny bit of negative divergence there. And above the 0.83 level, we've obviously got the 0.835, which is important because we've got the two moving averages there. And then, on the downside, 0.825 would be a key level to hold. Let's move on to US dollar JPY. I mean, it's just surging. It's like, this is one that I think you've just got to have a trailing stop on if you want to trade it, if you want to get long, because waiting for pullbacks, I think you could just miss the move. Again, a teeny bit of negative divergence there on this high here versus this high. But I think 130 is a new line in the sand now for the Japanese yen. We've heard from government officials that that's sort of where it could be. So we'll have to see if we get any further jawboning or any policy action from them. But yeah, US dollar JPY continues to surge higher as those US yields push higher. Let's have a look in commodity land, the commodity space. Again, we almost got right up to 2000. We were very close to it, and but sellers came in and pushed it back down. Again, we right on that 62.8 RSI level, which has caused former price rallies to run out of steam. So we'll have to see if that's the case again. 2000 is a key psychological level. We're also pushing up against some key Fibonacci levels too, 61.8 and the 50%. So that's key to watch. On the downside, 1950 should form some support for the bulls if we were to see any pullbacks. Let's move lastly on to spot Brent. We can see it sort of broke out of this flat-sided descending triangle pattern. It's broken out of that, but we're seeing a bit of a pullback here, rolling over in crude We'll have to see if that's going to be sustained or it's just going to be a modest pullback to this sort of 50-day simple moving average or 21-day exponential around this 110 area. Um, the RSI is sort of in no man's land, so we can't really gain any information from that. I'd say 120 on the upside would be a target, on the downside 110 for now. That's it for today's analysis. I hope you've enjoyed it and you've got something useful out of it. And I'll see you. I won't be seeing you next week, Tuesday. Actually, I'll be in Amsterdam. So good luck trading out there. I'll be seeing you in the month of May for the next episode.